Hello, hi. My name's Jerry Miller from Trendsignal, a trader education company. And today I'm going to talk about the Forex markets and the US dollar. I know all of you will know that the US dollar is particularly strong. It's in virtually all media this week and last week, hitting close to parity, actually going through parity last week against the euro at a 20-year high. The dollar index, which is actually versus a basket of currencies, including the euro, hit a 19-year high. So the dollar is particularly strong. Let's have a quick look at a chart just to show you. This is one of our charts from Charting Center, and you can see here, this is actually a monthly chart. So each bar, if I sort of zoom in, you can see each bar is 1 month, but you have to zoom out quite a lot to go back to the last time we were at these sort of levels. And if I put my cursor on it and then stretch across to the left, you can see we're talking about 11 2002, so November 2002. So that's only what 11 months after the notes and coins came into circulation for the euro in January 2002. Remember that the actual euro came into being on the 1st of January 1999. So yeah, um, it's pretty much close to an all-time low, isn't it? Okay, let's get back to my presentation. And really, what I want to address now is what's driving the strength in the US dollar. Um, War in Ukraine is a big factor, which is sort of creating a lot of safe haven flows. Global growth concerns due to the war. You've got China's zero COVID policy, which is just seems just so ill judged. Anyway, that's resulting in more lockdowns. The effect has been really quite marked on the Chinese economy, which only just expanded by plus 0.4%. That data was released just this Friday, gone last Friday, with expectations of a rise of 1.2%. It was only plus 0.4%, and it was one of the worst quarters on record and sharply down from the 4.2% recorded in the first quarter. And there are also serious concerns with the Eurozone as well. The impact of the closure of the Nord Stream 1 pipeline, not the Nord Stream 2, which never got going, but the Nord Stream 1 pipeline. And that's been closed for maintenance. Someone's put inverted commas in one of the reports I read, i.e., is it maintenance or is it Russia? And I'm sure it's more Russia and its political maneuverings. But it will have a significant impact on growth, especially in Germany and the likes of Italy, which are big consumers of Russian oil and gas. It's mostly gas, actually. Germany is definitely feeling the effects with the disruption to trade because the trade balance that was reported, I think it was reported on the 4th of July, it went negative for the first time in 30 years. So I think that really underlines how trade has been disrupted in Germany. The other factor that's causing the dollar to rally is that the US has raised interest rates from near zero in March this year. If you remember, they were 0 to 25 basis points or 0 to a quarter of a percent. And they're currently at 1.5 to 1.75%, having been increased by 0.75% in the last meeting in June. The market is expecting a sizable increase in rates at the next Federal Reserve meeting. That's run by the Federal Open Market Committee, with a 50% probability of a whopping 1% jump in rates to 2.5 to 2.75 band. And you have to just then compare this with the minus 0.5% in the Eurozone and minus 0.25% in Switzerland. And here we've got them in the UK at 1.25%. So you can see this interest rate differential between the US and all other developed world currencies is a big draw. And that argument is only going to continue to the the year end, I should say, with a very hawkish Fed who have said that even at the expense of the economy, they will really tackle inflation head on and will not shirk from raising rates as much as is needed to contain inflation. And so, with the inflation number released last week hitting 9.1%, the market actually at one stage it was pricing in a 1% rate rise with a sort of 75% probability. That's sort of calmed down a little bit, but there's still a 50% probability. And in fact, we're looking at year-end interest rates in the US to be 3.5 to 3.75%. So that is a big driver. That's sucking in a lot of investments. and that's one of the reasons why investors are putting more of their money into US dollars. Okay. What are the effects on the markets and wider implications? Well, a stronger dollar affects economies and their markets in lots of different ways. Many commodities, such as oil, gas, precious metals, so that's gold, silver, platinum, palladium, base metals, so that's the likes of copper, zinc, aluminium, tin, are all traded in US dollars. Well, a lot of them are largely traded in US dollars. And without any underlying movement in the dollar price, the cost of all these dollar-based commodities have gone up in price as the dollar has rallied. Take oil, which actually has fallen over the past month. A barrel of oil in sterling, for example, has not fallen anything like as much as a barrel of oil in US dollars has over the past month because of the strength in the dollar. So a strong US dollar has put additional inflationary pressures on almost all countries as they are actually importing inflation with the rally in the US dollar. This never used to be a problem actually when inflation was non-existent, and that has really been for most of the last decade. So countries were quite happy to see their currencies devalue against the dollar. It was sort of called competitive devaluation, which is frowned upon. But anyway, now it seems like countries are happy to let it happen, but they don't actually have any way of countering it at this stage. Um, Anyway, what about the effect on the developing world? The developing world economies are typically debt laden. Even worse, a lot of debt is denominated in US dollars. And the reason why I say even worse, because it's denominated in US dollars, the cost of servicing that debt and repaying that debt in local currency has gone through the roof. A lot of developing economies have been struggling following the pandemic, and they've increase their debt burden significantly, like a lot of developed countries as well. That's happened here in the UK, as I'm sure you all know. Um, and a lot of these developing countries have got rampant inflation, and they're struggling to pay down their US debt, which will have ballooned in line with the rally in the US dollar. Which, as I said, has hit a 20-year high against a basket of countries. And if you take a country like Sri Lanka, very much in the headlines and quite an extreme case, disregarding sort of how they managed to pile up such a massive debt pile of whatever it is, sort of 50, 51 billion. This beautiful island with a population of just 22 million cannot service its debt and is in default. So it's actually in default, so it's unable to pay its creditors. And it's the first Asian country since 1999 that is defaulted on its debt. Um, Anyway, foreign exchange reserves have gone. It's unable to buy much needed energy, medical supplies. Cost of energy and fertilizer has jumped much more than in developed countries. And they've got inflation in Sri Lanka at 50%. But Sri Lanka, I mentioned that because it's been very much in the headlines with the removal of the president and the prime minister. But Sri Lanka's not alone. The IMF reckons there are 38 developing countries that are in debt distress and are at a risk of default. So with each dollar rally, the probability that one of these nations could default is brought nearer, which is not good for obviously for any of these economies, but it's also not good for world trade, which we all depend on. Okay, let's have a look at just my last slide, and that what's the outlook for the US dollar over the next 6 months? I was wondering whether to discuss this or not. I think making predictions is a bit of a lottery with the current state of flux in the macro events with the war in Ukraine, which is very much a determining factor. I think the key to the US dollar's path over the next 6 months is obviously a change in sentiment, and that will happen if the war in Ukraine winds down. Russia shelves its plan for occupying more Ukrainian territory. And the other ingredient, obviously, is inflation and interest rates. Markets have a tendency to regulate themselves to some degree, of course. The jump in inflation in the US, reported at 9.1% last week, and the highest in 40 years, will inevitably dampen down growth and even inflation, and eventually inflation. If the US economy and its central bank decide that rates have done enough at some stage, and that rates could be cut, it's likely that the dollar will start to fall if it hasn't already done so. Remember, markets love predicting what central bankers are going to do. So unless you've got a crystal ball and you know what will happen in Ukraine and what will happen with inflation and interest rates, then I guess your guess is as good as mine. And my guess is that the dollar will likely peak in the first half of 2023. That's it. Thanks for watching.